about 10:30 in Honolulu, 4:30 in New York on Monday, the 3rd day of March, 2014. And this is the daily report for gold and silver. And what a way to start the week. What a day we're having. Of course, we have sharply higher pricing pretty much across the board in the precious metals, with gold absolutely leading the way. Current print, as you can see on the screen, 1352. Also continuous contract, 1352. You can see the highs and the lows of the continuous contract here on the right in terms of the cash market according to Kitco. Current change up 2380, low 1340.80, high 1356. Currently trading 1352.50, putting on up about 30, and Kitco has it putting up about 23.90. Silver also trading dramatically higher. It's actually up almost a full percent, up about 19 cents, 21.40. Current print on the screen. We did go long silver. We'll talk about that trade towards the end of the show. 21.26 on the low, 21.80 on the high. What a dramatic rise in the precious metals market, specifically gold, up almost 2%. Of course, we did send out a special trade alert. That's how all of our trades are implemented, through that special system. If it says trade alert on it, it means it's an actionable piece of email to be regarded differently than our standard email letter that goes out daily. And there were a couple of clues really leading up to what compelled me to enter the market so quickly. And it all really began on Friday, because what had happened is we had been in that trade, I believe, since about the 7th of February is when the signal initially went out. We'd been raising our stops. We actually got stopped out on Thursday at 13.25, and the market was genuinely trading lower. In fact, it was trading about $10 lower throughout the day. It's the way that it closed on Friday. It almost went to unchanged, and the dynamics of what I was witnessing told me that we could, in fact, see a rather dramatic spike come Monday morning in Australia, and that would be based on whether or not there was any resolvement with the crisis going on in the Ukraine. And since there wasn't, my sense was we could see this market really dramatically spike. When it opened up, I believe, about $7 higher, immediately came down to where it was only up about $4. Silver actually went in the negative, and that was our trigger, because my sense was that if this market takes off, it's going to get away from us, and I wanted to reposition ourselves. When we sent out that signal, we sent it out about a half an hour after the opening in Australia. That's about 1 o'clock here, so about 1:30 here is when we actually sent it out. At that point, the marketplace itself, in terms of where it was trading roughly here, 13.33, so roughly in this area. And my sense was that if we began to break out, we're probably going to go and try to take out these highs that we're sitting at 13.45. We have to look at a longer term chart, because we've absolutely exceeded that. So traders, if you took that call, you're in anywhere between 13.33, 13.34, somewhere in that area. We have our stops. We will be effectively trailing them up. But there's no doubt our timing was impeccable, because this market dramatically took off. We could not, if we wanted to, take on another position at this 13.33 area. It just doesn't exist anymore. And the market's up and away at around 13.51. So I feel good about the trade. It's already showing us some profits. We're certainly not out of it, but I think we needed to get back in. The other thing that I looked at was basically the way the market's been trading. When we talked about the characteristics of this market, we had this almost parabolic move. We had a 23% retracement. Market goes up, and the retracement, I believe, when we looked at it again, which is this retracement right here, from here to here, and this is our 76% retracement here. Our 61% retracement is here. So my sense was that just from this little rally right in here, when we looked at the retracement was actually a good chunk of that. And so it told me that we could have, in fact, witnessed any kind of downside activity. As you know, coming into the weekend, I was looking for the potential for this market to move back down and we would reposition ourselves at a better price. I'm not really concerned at what price we enter the market as long as the market is trading effectively above that if we're long. And my sense was that we really needed to take that move. And I'm really glad that we did in hindsight now that we look at the market, some $20 higher than our actual entry price. So traders have gone ahead and pulled out our daily chart. And the reason for pulling this chart up right now is to really look at this most recent top right in here. And as you know, there were a couple of zones we were looking at. One of the zones was 1329, 1330. We saw it kind of retrace a little bit, pop past it. This is really our next point right in here. Because when you look at this top here and compare it to this most recent top right in here, you pretty much line up precisely. It also lines up to right here, this top of this A, B, C up. We get this truncated 3 count, 1, 2, 3, and then we go back into an ABC counter trend, if that's what it is, because as dynamic as it is, we could have gone back into an impulse phase. But over the next couple of weeks, we'll talk about how we differentiate that and what technical evidence we really need to see to determine one way or another what we're looking at. But effectively, there's no doubt when we look at this market as it stands, we've gone into our first real level of resistance where it should come in. And it's got some great historical data behind it. These two bottoms, these tops here, and now again here. So does that mean that the market will then go into that counter B wave here and then up? Well, it could, because it has run. And so effectively what we're going to want to do is trail our stops up so it at least protects our equity, if in fact that's what we're witnessing. But it has gone and moved to a real logical place. So we will look at where we want to move our stops at later on today. Now, interestingly enough, I pulled up a daily chart, and on this daily chart, we have a very, very short-term fib retracement and a longer-term fib retracement. Let me try to line that up so you have an idea of what we're looking at. One of the fib retracements really starts from 1800 all the way down. This second one just covers this one particular area here. And when we do that, it gives us our really long-term perspective. In other words, where I think this particular rise could take us, and not necessarily this particular wave. We might see it correct and then move up. But my target has been 1435, and we're getting some pretty good solid technical evidence that would suggest we could easily see the market go there. The real question is, if the market corrects, where will it correct and where will that correction take us? Because we've seen these shallow retracements, but with no follow through, it just came right back up. So that's, in terms of a large target, that's what we're looking at. Now traders, all I've done is actually adjusted one of our fib retracements because I wanted some other numbers. We were pulling our top from here, but I'm now pulling it from right before the market falls. I'm looking at this as kind of a flat bottom, and so this being the top of that area down to the bottom. When I do that, 1400 comes in as a 50%, 1452, 38%, 1348, that's coming in also as a 61% right here. So we want to see how the market reacts and trades in this area, but I do believe in terms of our long-term perspective that we're probably going to see this market head, as I said, to about 1435, matching this particular top here. So traders, what about silver? We did make a recommendation. We went long gold at 1333. As far as silver goes, it was trading at 21.18, and so I marked this in at 21.28 or 21.25 on that trade. And it's the fact that it has really expanded over this muck being this long-standing top that comes in around 2050. Our stop is just below that, 2058. That's the reason that stop is there, by the way. I do believe in terms of where this market could move, and again, it's going to be a series of waves, but 23 is my benchmark based upon a comparable move in gold. If gold moves to, as I said, 1435, this is where we would see silver go in a corresponding move. We'll talk about silver more through the week. We'll talk about our current trades, and we'll definitely look to raise our stops up. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.